What's happening, guys? Charlton here with Hive Trading. Today I wanted to take you through one of my trades from last week, which actually secured me a 3% on my trading account. One of the things I wanted to do with this particular trade setup is take you through my train of thought when actually analyzing the market and how I approach the market and certain things that I look for in the market when it comes to technical analysis before I actually take a trade setup. So with this one, what you see is I actually started out analyzing on Euro JPY, but because there was a bit of a correlation between Euro JPY and New Zealand JPY, I actually ended up placing the trade on New Zealand JPY, and I'll explain why when I get into the video. But other than that, please enjoy the video. If you like this being one of the first videos on the Hive Trading channel, let me know that you like this. Let me know what content you like to see by dropping a comment in the comment section below, hitting the subscribe button and hitting that thumbs up button as well to help with the algorithms. So yeah, anyway, we'll hop on the charts right now, and I'll see you on the next video. Take care, guys. As you can see, I've got my harmonic pattern drawn up already. This is a sharp pattern and it looks like it's about to hit, it's about to complete right on that level right there. I've got my zone drawn up, but what I wanted to do is I wanted to go over what I was seeing on this chart for me to give me my bias that price will potentially head back down to the downside. So if we start on the monthly time frame, because this is how I like to trade, I like to do a top down analysis. So what we can see is that for the past 3 months since June, price has been in a downtrend, right? Before that, we can see that from the 1st of May 2020, price has been pushing to the upside, and from 2nd of November 2020, every single month was a bullish month. Now as we all know, in the Forex market, there's ebbs and there's flow. In every single market, there's an urban flow. So we can expect a potential retracement. So on the longer time frame, of course, this is only a correction. However, what I'm expecting is that price would eventually hit this zone, and then I'll be looking for more confluence back to the upside to continue this long uptrend that we see on the monthly. But for now, for the midterm, we can expect price to keep heading back down up to this zone. So this is what I'm basically seeing on the monthly. Now if we head down to the weekly time frame, what we can see is that this uptrend line has been broken, right? The uptrend line signaling that momentum has changed to the downside. And to add to that, on the weekly time frame, what we can see is the 130 whole psychological number has been broken here by this candle on the 2nd of August, from the week starting the 2nd of August. So it's safe to say that price would continue to push down. However, what we can see this week, price has given us a retracement, and this for me is one reason I want to be selling, because we know that price for several months now has been on the downtrend, as we saw on the monthly time frame. So this retracement is safe to say should be coming to an end. However, what I'll do is I'll be looking for more reasons as to why this is coming to an end, which is why I'll drop down to the daily time frame to look for more confluence and more reasons for me to short this market. Straight off the bat, what you can see is for the past 5 days, that is, I believe this week, for the whole of this week, what we've had is a massive push to the upside. Now once again, it's safe to say that we can expect a correction, at least. Even if this was the beginning of an uptrend, we can at least expect a correction for maybe a day or half of a day back to the downside before it makes its way to the upside. However, I highly doubt that this is the beginning of an uptrend, because we are still in a downtrend, as we've seen from the weekly time frame, with price breaking this massive long uptrend line. So that's what I see on the daily. There's also other reasons, such as Elliott wave theory, but I'll probably go into that later, possibly after the trade has been completed, if we do get a setup. But I'll go into that as well, which gives me an additional reason as to why this is also a potential retracement and a potential sell setup. So that's what I see on the daily time frame. Let's head back down to the 4-hour time frame, looking for more confluence. Now on the 4-hour time frame, straight away what we can see is that the trend is to the downside based off of the EMA. Now I use EMA 200 and EMA 50. The red line is the EMA 200, the blue line is the EMA 50, and when the blue line is below the red, downtrend. When it's above the red, it's an uptrend. So from straight off the bat, we can see that this is a very strong downtrend. Price is trading below the 130 psychological number. But also what I want to bring your attention to is this 2 candles right here. Now one of the ways I draw my zones is when I see an engulfing candle to the downside followed by several bearish candles. If it's basically a supply zone, what I'm looking for is massive candles, red candles to the downside, just as we see here. And what also verifies this zone is the fact that when we had this engulfing candle, price broke several lows, as well as this trend line here. So we can see that smart money was accumulating around this area right here. So all of this was distribution. So smart money was distributing, and then here was the final buy back to the downside. So it was safe to say that in this particular area there is a lot of volume to the downside by smart money. So that's how I got my zone, which I've drawn here, as you can see, for our point of interest. So that gave us our zone. Now additionally, what I see on the 4-hour time frame is, now actually if we go down to the 1-hour time frame, we have more confluence. So we've got our zone from the 4-hour time frame. Actually, let's go back to the 4-hour. There was one more thing I missed. So these 2 candles, one indicator that I love using is the fixed range, and it gives me it gives us the highest volume in a particular time frame. So what I'll do is I'll select from this 4-hour candle to this 4-hour candle, because that's our interest, and this black line right here. So if I take this black line right away, you can see the red line right here, and that's our volume profile. So in this whole 8-hour candle where smart money was operating, that red line is basically where the highest volume happened in that 8-hour time frame. So that's how I've gotten basically this black line. But what you have to understand is it's not necessarily a guarantee that when price hits this line it's going to bounce off. You still have to look for other confluence. But basically what this does is this gives you a reason. It builds up on the bias that we already have. So that was just one thing that I needed to cover on this 4-hour time frame. Now heading back down to the 1-hour time frame. So the 1-hour time frame, this is where I was able to get now my shark harmonic pattern. Now if you're trading harmonics, we're made to believe that majority of harmonics are a counter trend pattern or setup, but it depends on how you analyze the chart. So the way I like to trade my harmonic patterns, I basically look for a trend bias to the downside or to the upside, and then I look for a harmonic pattern that basically helps add confluence to my bias, right? And as we can see here, we've gotten a nice shark pattern. I won't go over the the measurements, the Fibonacci ratios and things like that, but yeah, I've done my measurement, and this is a shark pattern once it completes on this level here. So that is the first confluence on the hourly time frame in that zone, by the way. So in the zone, I like to look for several confluence in my zone. I've already done my top-down analysis starting from the monthly time frame. I've built a bias. I've built a direction where I expect the market to go to. I can see that smart money are interested in pushing the market back to the downside. So now all I'm doing is looking for a reason as to why I can enter the market and follow the trend basically of the smart money. So that's the first confluence, the harmonic pattern. Now another thing that is giving me a confluence here, as everybody knows, is Fibonacci. So one thing I like to do is look for potential Fibonacci alignments in my zone, in my kill zone. So if we draw this right here, what we can see is we see a perfect alignment, 618 alignment with, do you remember the black line that we drew on the 4-hourly time frame where the volume profile is? It lines up right perfectly with it. So that is one of our additional confluence. So we've got a 618 retracement perfectly aligned with the volume profile. If we take this back down one more time, look at that, we've got another Fibonacci confluence lined up, not as perfect as the previous one, but lined up with the volume profile here as well. So that's a 7.8 retracement, 78% retracement, sorry. And let's see if we can find one more. Boom, and here we go. So what do we have here? I believe that's an 86% retracement lined up with the volume profile as well. So these are additional reasons as to why I'm getting involved with this trade, especially around this area. And as you can see, price is currently setting up. And another thing we can look at as well is divergence, right? One thing I'll use divergence as is a reason for why momentum could potentially shift. Now the key word is potential. You don't want to just trade because you see a divergence. All of these are just clues as to when the market will turn around. So that's the major points for now. As you can see, the pattern seems to be close to completion. So what I'll do is I'll come back. If this gives me a setup, if I do enter the trade, I'll let you know how it goes. I'll let you know how it plays out, and then we'll take it from there. But so far, these are the main reasons as to why I'm looking at this potential setup. Now, one more thing before I actually go, one thing I need to show is, you see this area right here? This is smart money in operation, right? They're so if you see, we've got equal highs. I think this is like a triple top. So we've got 1, 2, 3, and then we've got a break of this neckline, a fake to the downside, and price has gone back up, knowing that stops are going to be right above this equal highs. This gives us liquidity to the downside. So this is another reason, just to add to the trade setup, another reason as to why we can expect price to actually turn around from this pattern completion and for it to head back down to the downside. So I'll wait for this to play out, and I'll come back once this has completed. I just wanted to give you guys a little update on the trade setup. There's been a change of plans. So if we go back to Euro JPY, what you can see is that price broke out above my kill zone. Now when this happens, for me, that is a no trade setup, mostly because I love putting my stop loss above the kill zone. However, in this scenario, what we have is price is traded right above my kill zone and it's turned around. For all we know, this could potentially be just a stop loss hunt. Smart money knowing that stop losses will be placed there, and this is why for me I love waiting for confirmation in my kill zone before entering the trade to the downside. And there were no confirmations on the lower time frame. Typically I go down to the 15-minute time frame. On a very rare occasion I might go down to the 5 minutes, but often I mostly go down to the 15-minute. I wait for confirmation to the downside and I enter my trade. However, I haven't got that in this scenario. But if we pop back down to New Zealand JPY, what we can see is on the 1 hour time frame we do have a cipher pattern that completed right about this area, just below the 4 hour fixed range. The setup, however, is very similar to Euro JPY. I had this chart marked up before I started recording my Euro JPY analysis breakdown. However, it's quite similar. So if I'll just quickly take you through it. If we go to the 4 hour time frame, what we can see is that this trend line was broken by this candle bar right here. However, what we then had was a retest of this trend line followed by a massive bearish candle to the downside. Now, when I see something like this, for me, this only signifies that smart money is coming into the market. And then what did we see? We saw that price took out all these lows as well as the trend line, and then right here it takes out the 75 psychological whole number. So for me, this is just confirmation that price will potentially carry on down to the downside, and I would like to get in on this trade setup to the downside. But another thing that you need to see is that the EMAs are right now looking very bearish. The momentum is very strong to the downside. We have the blue EMA, which is the 50 exponential moving average, below the 200 exponential moving average, which is the red line, and price is basically right now consolidating on that 200 exponential moving average. So for me, these are all build up in my kill zone, signaling that price would carry on down to the downside. And if we go down to the 1 hour time frame, as you can see, we have a massive divergence, once again indicating that momentum shift to the downside. And what we can see here is that this is sort of like a double top right in my kill zone. So all of this, guys, for me is just more confidence build up in my kill zone. I'm actually in this trade. I got in at the completion of this candle right here. And another thing that I use to get into my trade, as well as candlestick patterns, this is obviously a pin bar or kangaroo tail, whatever you want to call it. But for me, I also use volume spread analysis, which is analysis of each individual candle, the volume, the spread of the candle, meaning the size of the candle. And on my volume spread analysis, this is supply coming in, showing that there are sellers stepping into this market. So I got in on this completion right here, stop loss here. So I believe this is about a 20 pip stop loss. Yep, so 5 pips above the kill zone, and what we're expecting is around 80 pips, 85 pips take profit. So you're looking at 4-to-1 risk to reward. Let's see how this trade plays out, and I'll come back to finish off the analysis. What's up, guys? Welcome back. And I wanted to take you through the result on this trade. the trade actually didn't end up hitting my ultimate target, but I still ended up with a 3% profit on this trade. So I'm just going to walk you through what has transpired here. So if you remember correctly, we got in on this candle right here, and straight away price moved, reacted on that volume profile that we generated on the 4-hour time frame. Price reacted and continued to move down, and there was a little demand zone right here, which caused for price to then go back up, and for several hours price was ranging right here in our kill zone. Now what I want to emphasize, guys, is the importance of trading in the zone. So as you can see, the zone as well as the volume profile that we had, which is this black line right here, acted as a good resistance for our trade and stopping price from going ahead and hitting our stop loss. This is the reason why I decided to opt out of the Euro JPY and opted in for the New Zealand JPY trade instead. So as you can see, our stop loss was safe, and price reacted right here in our kill zone and then proceeded to break this demand zone that was actually stopping our trade from carrying on to the downside earlier on. Price broke, retested that zone, and continued to the downside. Now, one thing I would like for people to know, or for you guys to understand, is it's very important to make sure that when you actually decide where your profit target is and where your stop loss is, and you've entered a trade, it's important to actually manage the trade as well. Trade management is very key when it comes to trading. And basically what I noticed is that there was structure over to the left. So when you look left, you can see that this right here would appear to be a nice demand zone, and you can see that price started to react from that level. Another thing to see as well is that the RSI was well oversold. So this for me was signifying that momentum was about to shift back to the upside. So when I saw this first reaction here, I left my trading, but I was still watching it. And when it came back here and I saw the wicks and I saw price ranging, I knew that basically I needed to take some profits from the table. So I ended up taking half my profit. I moved my stop to break even, and then price went ahead and stopped me out at break even. And the reason why I ended up with a 3% profit is because this is a small account and I'm basically utilizing high risk. So on this account, I was risking 3% on this trade. Price ended up moving 2-to-1, which is why I ended up stopping out, taking half of the profits, because it was already 2-to-1. That's already a significant amount of profit. Took half my profits, moved my stop to break even, and as you can see, price went ahead and stopped me out of break even. This is the importance, guys, of risk management. You don't just want to leave your stop loss and let the trade do what it wants to do. The market is not fair. You might have a bias, you might have done a great analysis, but it still doesn't mean that the market has to move to the way you predict it or you want it to move. So risk management is very, very key. After doing a great analysis, you want to protect those profits. Another thing I like to emphasize as well is, for me, I tend to shoot for 3-to-1 or 4-to-1 per trade. Reason being is when the market moves in my favor, I want at least a little bit of profit, so that I know if I take some profits off the table, I'm still up a significant amount. And this is the reason why for me, I tend to go for a minimum of 3-to-1, and you know, this is basically the result. So guys, if you like this video, if you learned something, please comment in the comment section. Let me know what you've learned. Let me know what kind of content you would like to see in future. Let me know if there's anything you would like me to go over, maybe something that I briefly went through on this video and you would like me to elaborate more. Comment down below, guys. Let me know, and I'll catch you guys on the next one. Thank you for watching this video, guys, and I'll see you soon.